Inflation settled some of the fears out there. We had a lot of concern around the inflation story yesterday was, are we going to get inflation to tick higher? Are we going to get, danger zone levels kind of surfacing for inflation? And instead we got kind of a mild read, which followed a soft read on Wednesday's or Tuesday's producer price index. So if we take a quick look at everything here today, producer price index came in light, followed by the consumer price index, which also did tick higher, but quelled kind of concerns or expectations. Hope everybody's doing well. Hope you're having a nice trading week. This has been a heck of a week, to say the least. Very volatile. A lot of moves, a lot of things on the move. Metals moving. You got stocks moving. You got currencies moving. A little bit of everything. Gold is taking a move higher here. Actually, very impressive here today, considering there was some good news out of the Middle East. There was, again, if you guys hadn't heard already or seen that, some peaceful resolutions came about when it came to the Israel and Hamas conflict that is going on. And I was actually surprised to see gold continue to move higher off of that number. I mean, I suppose you had CPI and PPI, which were definitely good news for gold, right? Softer inflation is good for gold. That may not sound intuitive at first glance, but it does make sense, because if the Fed cuts rates, that is very good for gold. And if the Fed does not cut rates at all, it is not so good for gold, because it makes the dollar strong or weak, right? So with inflation numbers coming in nice and soft this week, right? With soft inflation numbers means the Fed may not necessarily be like ready to cut rates right away, but we were talking about, guys, there's a lot of people talking about rate hikes in this week, talking about how they think that there's a possibility. There was at some point, the FedWatch tool had a 30% chance of rate hikes this year, which is crazy. So, we've seen a little bit of that go out the window, which is arguably a very positive thing for gold. A rate hike for gold would most likely not be positive. Rate hikes, in fact, if we go take a look at like the rate hiking period that was 2022, you can kind of see what happened to gold during that time. Throughout the duration of those rate hikes, gold was put under pressure. And then, of course, we kind of talked about no longer cutting or hiking rates. And then we went into this, upward sideways range. And then once we started really talking about rate cuts, gold really got excited. I also want to show you guys something really exciting. I was working on this yesterday, and it is finally at a point where I can pull this up and we can use it for streams. This is the brand new US economic heat map on the Edge Finder. Possibly very quickly my favorite page on the Edge Finder, because it pretty much accomplishes the full goal of the software in a singular page. The US economic heat map page that we just added to the tool will allow you to look at everything that the Edge Finder is monitoring in one screen to get a better idea of how the economic data in the United States is falling. So what do we see right here? Well, we don't have to go through it bit by bit, but generally speaking, this section right here is going to be your economic growth section. Here is your inflation section. Here is your jobs section. Let's just give a quick synopsis here. Growth looks really strong. Inflation is doing okay. And jobs look strong. Without having to dig through 37 different CNBC articles to get an idea of how the economy is doing, We don't need to do that. This tool makes it a possibility to just look at, from a bird's eye perspective, what is the US economy looking like? I'm thrilled to have this because this makes my job as a commentator in the space and as a fundamental trader so easy. I have everything in front of me, and right now I can very quickly determine, what are we looking like? Should the dollar be strong? Should stocks do well? Well, we can get a better idea of that just by pulling up this page. Now, of course, you can go through all the individual data like we do in the streams and videos all the time. And if you're an Edgefinder user, then you're probably well versed with navigating around all of the different data set that we have within the tool. But this page possibly is my favorite page now on the Edgefinder, simply because for economic data purposes, there is no place easier that I possibly know of than right here to have everything I need in front of me to look at this.
The Edgefinder is the #1 trading tool for 2025. The Edgefinder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edgefinder. The Edgefinder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edgefinder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edgefinder.
Okay, retail sales numbers should be coming in here. No major reaction as of yet. S&P 500 slightly higher. Dollar index slightly lower. 0.4% retail sales. That is lighter than expected. 0.4 was said in the chat if you're wondering where I got that number. And again, S&P 500 dipping here ahead of this. Okay, so 0.4% retail sales month over month, and core retail sales coming in 0.4% compared to 0.5. So a little bit light on that front. We also got unemployment claims, which came in slightly higher than expected, but not by a big margin. So overall, we'd say not a huge reaction, not a huge response from this, but let's take a look. By the way, we got 792 people watching. Thank you guys for tuning in. If you're enjoying the show, do me a favor, hit the thumbs up button. It just helps to support the YouTube algorithm, and I appreciate you quite a bit. So gold is up at resistance here. Retail sales here not acting to really make too much of a move. Gold was moving ahead of this and now just kind of slightly moving a little bit more. S&P 500 5-minute chart, NAS 100 slightly higher. Russell popped and then dropped. Dow Jones pretty much unmoved. So not a big reaction here this morning.
Paying attention to the JPY pairs or the euro and the Japanese yen yesterday, and today I'm looking to see if it will continue down. So I'm just focusing on the 1 hour and this downtrend. I did have a little bit of a little flag entry here to sell, which unfortunately didn't fit the plan just because of this large wick. Then we did continue dropping down, but now we are getting another large wick, which is a warning sign. And I want to see another drop to the downside like this. So the overall story, I do believe, is still, people are still a bit on the sidelines because of January 20th, right? I think that is the date when Trump is coming into office. So maybe some people are still waiting it out, seeing which policies he will implement on day one. So for most of the other pairs, euro US dollar is kind of flat right here. We did have the inflation rate. So I believe this was CPI. And after that, we just kind of messed around. So yeah, EJ trending down. I'm looking for sell setups. Aussie US dollar is a bit flat here as well after we had CPI. AJ is sort of not moving anywhere. pound US dollar is also pretty flat, and New Zealand JPY is the only one that I'm potentially looking for some sell setups on as well. Because overall, I'm focusing on this part and seeing a downtrend, and I'm seeing this nice leg, a little bit of a continuation. But yeah, nothing looks that clean for me to be really interested. So being more patient, and as I said, we do have Trump coming into office, and the Fed conference is, I believe, on the 27th of January. So we will see what will happen with that. Will it be dovish, hawkish? And I'm guessing that Powell wants to see which policies Trump will implement as well. Because if there's a lot of tariffs and stuff like that, well, then he will need to readjust the interest rates to follow those tariffs. So we're still on the edge a little bit.
Yeah, no, I mean, you broke that down really well. That is very much what's happening. Is the markets are kind of sitting in angst, wondering what's coming from Trump and how will the bond market respond and the stock market respond, because there's many different directions, and we could go down that path. I'll just give a brief highlight. If Trump takes more of a direction where they're like, we need to be massive government efficiency and there's tons of layoffs and there's more systematic changes to try and reform stuff, the stock market and the market in general is not going to love that. If that is their focus, from a humanitarian standpoint, maybe you agree with that, maybe you disagree with that. But the point is, we're talking about markets here. Markets won't love that. What the markets would love is if there's heavy emphasis right out the gate, talking about, we need to get way more lenient on restrictions towards regulations, companies, monopolies, like all those things. If they like let off the brakes and just said, you guys go crazy, we just want to grow like a weed for this economy, then stocks and the economy would absolutely rip. And, here's the thing, whether you like Trump or dislike Trump, the one thing about him is he uses the stock market as his personal scorecard. That's why I kind of see like there's like a limit to how much he'll do if it is something that's negative for the stock market. And there's a lot that he'll do if he knows it's good for the stock market. That's my opinion on the matter. It doesn't really matter though, because at the end of the day, in a couple days, we'll see a lot of their directive, their kind of first and foremost decision making. That being said, I kind of cut ahead of Miko because I want to ask you, Miko, and also let me take a guess. Do you like yen pullbacks? Maybe I'm feeling dollar yen, pound yen as bullish setups. That's my guess. What are you looking at, Miko?
Oh wait, say that again. Bullish setups on pound yen.
I was thinking that's my guess. You would say. I'm trying to see if you like any of the yen crosses long, because I just remember last time, but we've had a little bit of a pullback here recently. Is this more of a reversal or a pullback to you?
I'm actually still looking to short the yen pair, so I'm still looking at.
So gotcha.
Yeah, I'm still looking at downside. So I was actually looking to short pound yen on the pullback, but it didn't pull back enough, and euro yen I missed it. It happened overnight. I'm actually looking at more downside. I'm looking to follow that momentum back to these lows here. So I'm pretty bearish on most of the yen pairs, maybe bar dollar yen. USD still pretty strong, and that one's still kind of trending up. So dollar yen actually looks like a decent buy. But pound yen,
I think that's what I was remembering is last time we were discussing it. You're talking about dollar yen's like impressively holding up despite the rest of them kind of plummeting.
Yeah, exactly. Like pound yen and euro yen, they're actually looking pretty bearish. But dollar yen actually still looks pretty bullish. So me kind of just focusing on the charts and the technicals, this is actually a market which I like to buy. So I'm actually very much looking for the pullback of this move here and looking for entries in this area. So dollar yen's actually a bullish setup for me, whereas pound yen and euro yen actually pretty bearish, which is kind of out of sync a little bit, but I'm going to see how the markets reacts. Maybe dollar yen just keeps falling, it doesn't react, or maybe pound yen and euro yen turn bullish. But for now, 154 is still an area I'm looking at. We're not too far away, so I'm keeping a close eye on that. But yeah, dollar yen I'm bullish. I'm actually pretty bearish in euro and pound yen.
Here's a question for you, Miko. Is there a universe in which you have both consecutively on, like where you're long dollar yen and short pound yen? Is that possible within your trading rules? Can you have both simultaneously going at the same time?
Yeah, I mean, let's say if dollar yen gives me a signal here, I'll take the trade and then I'll still have the bearish bias on pound yen as long as my requirements are met. but I would only enter that position once I'm risk-free on dollar yen. So it's kind of, even if it was the same direction, my kind of thinking is if I'm in a position and I can move risk in terms of my stop loss to break even, that position is now kind of void sort of. So I'm free to enter another position. I know, of course, with the correlation, if something happens to the yen, they're both at risk technically, but because now I've kind of limited it, I'm happy to get into another position, especially
Yeah,
with
well,
swing
and in
trading,
some
big
ways,
candle.
you've kind of hedged out your
Yeah,
yen
exactly.
exposure, right? So yeah,
Yeah.
very interesting. Yeah, I was just curious about that. Yeah, yen pairs definitely very interesting. I have not admittedly kept up with everything on that side fundamentally, but I believe that there was rumors of a possible hike. I'm not sure if there's further development on that. I'm pretty sure it's pretty close to now or has already happened, the Bank of Japan stuff. But let me just double check because I want to make sure I don't know when it's happening. Someone in the chat, find that out for us. I'm pretty sure there's like a Bank of Japan thing this week. They were discussing possible rate hikes, which would make the yen very strong. I think that's part of the reason why yen is strong right now. So we'll see. But that has a lot to potentially move the markets. I want to also talk about the dollar here, guys, because this has been a really interesting week for the dollar. Dollar had a lot of news, a lot of inflation numbers, PPI numbers, CPI numbers. And despite those numbers being arguably on paper supposedly weak for the dollar, we still see the dollar holding up pretty well. Marco, what are your thoughts on you talked to euro dollar earlier, but just generally on the dollar, do you feel like the dollar has more upside from here? Is the trend still intact, or is momentum fading on this one?
Yeah, so for the DXY, we are still trucking to the upside. Now, I did take a look at the last Fed press conference, and it ended pretty hawkish. So we had like a gain in the dollar, which followed the conference, and that looks to still be going on. Also, like the dot plot, the projections of the interest rate that the Fed does every other meeting were pretty hawkish as well. So I think that had a part to play. It's going to be interesting in 2025 because just fundamentally Trump is going to want to keep the rates low. So he's going to want to have the Fed be more dovish, which is negative for the US dollar. And he's probably going to put some pressure on Powell like he did in his last term in 2018, I think it was. Technicals, this looks pretty bullish still to me. I'm not seeing any large bearish candles. The big level would be here on the top, but we still have quite a few ways to go. Some of these highs were pretty much crushed with a lot of bullish pressure. So yeah, the technicals I would say are pretty bullish. The fundamentals are still pretty bullish in my opinion because of the Fed. But for 2025 overall, I would give a bearish reading because of Trump and the pressure that he will put on the interest rate being lower.
Yeah, no, I mean, back in the previous Trump administration, the dollar definitely saw a lot of weakness. And again, the other thing, we had a discussion just briefly yesterday about how the dollar being higher, so much stronger, definitely weighs a lot on, people who buy U.S. goods. I mean, that is a serious thing. There's also that component. That's why Trump doesn't love the idea of a super strong dollar. Really solid, strong dollar sounds good in theory, but it can also hurt exports from the United States and make them more expensive for people outside. So something to think about too. Miko, what are your thoughts? Technicals look okay for the dollar? The dollar, is this forming some topping signals? What are your thoughts?
I'm still pretty bullish. I'm looking at the main levels here for dollar, and Marco pointed one out all the way up here around 113, 114. And the one below, which you just snapped, is this area here, around 107. So the way I'm looking at the dollar right now in the higher time frames is we've been ranging for the past couple of years. It looks like we've finally broken to the upside. And if we keep up this momentum, I would expect us to get to that high over there. If we come crashing back down, the only way I would become bearish on the higher time frames is if we close back below this. Then that would give me a fake out signal. And after that, I would expect us to see a full swing back to the low of the range. That's the only way I would kind of expect more downside long term. But for now, since the breakout is looking pretty healthy, I'm still very bullish. I have to say there are some signs that we are slowing down. We're becoming a bit more corrective. So I'm expecting dollar to go through a little bit of a pullback at some point. But as long as we don't break underneath, I do think the bigger move is still to the upside. So longer term, still bullish, maybe a bit of a pullback. Would you?
Yeah, and I got to say too, with some of the data here that came out this week, I would have expected the dollar to have a little bit more of a slide, but holding up really well. Just showing the technicals, the demand for DXY is very, very strong out there right now. So we'll have to continue to watch that, see if that trend line kind of can continue to hold, if that momentum continues, or if we fizzle out. But right now, I would generally agree with you guys. Looks more likely to continue than to reverse, at least until we get something that changes that.
Yeah, I'm in dollar Swiss actually here. So this is my position on dollar Swiss. So yeah, it looks fine to me actually. I do know what you mean regarding the weekly resistance. It does look a little bit scary. However, the dollar is continuing to dominate. There was a headline this morning actually basically saying the dollar exceptionalism is starting to become a problem. So the gist is the US has been using fiscal and monetary policies to stimulate the economy. This has led to a strong US dollar, which in turn affects currencies across the world. For nations with high levels of dollar denominated debt, a strong dollar can increase debt burdens. Moreover, the strength of the dollar can also impact global trade as it makes the US goods more expensive to purchase for those using weaker currencies, potentially leading to trade imbalances. As the world's reserve currency, major movements in the dollar can have wide-ranging impacts globally. So this is a little bit of a concern. However, it's not something I'm going to really start exiting the dollar from just yet. So immediately I'm thinking that we are going to break this level of resistance. There's not really any fundamental factors that would make me doubt this. We've broken above this weekly 200 moving average, failed to really close or move below the previous weekly candle, showing buy side rejections here or sell side rejections. And this was mainly again due to CPI with some dollar weakness. So yeah, I'm more than happy to stay in dollar Swiss longs at the moment. Again, dollar domination is continuing. No reason to really doubt it at the moment. My euro pound target is kind of non-existent. So I'm kind of, to be quite honest with you, looking to get out as soon as I can. This drawdown's a little bit vicious. I did kind of over risk on this one. I wasn't expecting such a large move to the upside. But, it's one of those things. It's nothing that I can't handle. So realistically, I would like to get out just below my sort of break even or average price, which is at 0.835. So I'm looking to exit really at these previous highs down at 0.83575. If possible, if we can start seeing a move down there, that would be great. But at the moment, there's nothing to do. The pound is relatively stagnant. So if we go ahead and have a look at the gilts, we can see we can tell there is some investor confidence coming back, although we've not really changed trend. I mean, gilts and technicals don't really go together at all, but still, if we look at it from a technical aspect, we are still within this sort of trend to the upside. However, after the inflation yesterday, we spoke about this on yesterday's stream, but I'll quickly recap it for anyone that wasn't watching. UK inflation came out cool yesterday for the UK, and this is a great example of rate cuts actually being beneficial for the currency and not a bearish or a dovish factor. So with the gilts, this is essentially what the UK is paying on their debts. So if we look, this level hasn't been reached since back in 2008 during the Great Financial Crash, or the GFC. So it is significant. These gilts rising is not a good thing for the UK to have. So that is basically forcing more rate cuts than what was initially in the pipeline for the Bank of England, which is beneficial to bring down these gilts. So the UK's debt problem isn't quite as significant because, as you guys should know, the UK economy is really struggling at the moment. Welcome aboard, James. Greetings from Uganda. Well, hello from the UK, Godfrey. Would you recommend shorts on dollar yen? I would recommend nothing. I can't recommend anything, unfortunately. However, with dollar yen, what we're looking at really is 160, or what I'm looking at is 160 to 165. So we know, or I know already, that there's a very select few number of institutions that already have sell limits at 160 on the dot. I'm not really willing to do this yet because I'm looking at the range of 160 to 165, and this will be the range that I'm looking to catch the Ministry of Finance intervention, so the MOF. And the reason it's 160 is just because that's what it is. That's just the major level that everyone's decided, or the Ministry of Finance has decided that's the level of danger. So we've got the intervention. What we also have is rate hikes by the Bank of Japan. That's pretty much expected. It won't be a shock, but it is a bullish factor for the yen. So that I assume is getting priced in now. But the other side of that, we do also have the dollar. The dollar is strengthening. It's coming up to 110. It's not quite there yet, but I do see 110 on the dollar getting hit by next week, possibly. So yeah, I'm not comfortable going short just yet. I'd be happy to go short at the previous highs on dollar yen. So this would be at 161.55. I would likely dollar cost average into this with very, very small positions. When I say very small, I mean really small positions, because I've been burnt before in the yen, so I'm not very comfortable going in too heavy. But yeah, I'd be looking at something along these lines here on dollar yen. Yes, euro pound is dollar cost averaged. Longs on NQ. Let's see. I'm not sure what time frame you're looking at, but yeah, we can have a see what's going on here. So we've been looking at the indices, specifically the US indices, for quite some time. So the past couple of weeks, or the past sort of week or two. I'm a little bit cautious of this downside move that we are sort of continuing to see. This channel is pretty aggressive, really. There's not really a trend line there, but still, I need to see a clean break to the upside, possible retest and continuation up. That would be the only real catalyst for me to start considering taking this trade, because otherwise it seems likely we might see some further downside if we do follow previous price movements. So yeah, NASDAQ is not, well, the US indices in general aren't really anything that I'm looking at too seriously at the moment. Anthony, hey James, can you recommend a website to read up more about UK economy? I'm looking to get more knowledge on JPY Pairs. Not specifically one website. So for example, the UK stuff that I'm looking at, you can go onto the UK government website, you can look at their imports, you can look at their exports. So here we can see that they're importing more than they're exporting, telling us that they're relying primarily on foreign investment to survive, really. So it's generally looking at what drives currencies. You've got GDP, you've got the labor market, you've got imports, exports, so services. So yeah, unfortunately, I don't know one website specifically to look into it in super detail. You could look at, if you got the Edge Finder, you could go into the Edge Finder, look at the stats on there, and then go and Google those stats specifically. Mo, I'm good, thank you. How are you? So for everyone asking about the yen, I'm going to sound like I'm going to sound very boring here, but there is absolutely nothing for me to say. I've just covered basically everything on dollar yen, and all of the other yen pairs, in my view, are reliant on dollar yen. So again, 160 is the point, and I really do think we are going to get to 160. If we look at the dollar's trajectory is very clearly to the upside. The yen is very clear to the downside. Although we're having some short-term yen strength, it doesn't mean that's going to last. So I would suggest dollar yen's going up to 160 eventually. And then in between 160 and 165, I'm looking for a potential short. But until then, I have no interest in any of the yen pairs. The only other thing I guess I could add on to that is I wouldn't really want to go short on dollar yen itself. I would more be looking to go short on something like euro yen or New Zealand yen. And that's because the dollar, as I just said, is pretty strong. So I wouldn't want to go and short it. So then I'd go short on the yen by going short on a weaker currency. So it'd be the euro or the New Zealand. Pound dollar coming up, probably not. Well, maybe in the short term, but I wouldn't expect any trend change. It's actually going down. I wouldn't look for any type of bullish moves on euro dollar or pound dollar for now. Again, I'm starting to lose a little bit of my interest on dollar strength. Not really for any particular reason.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.